everyone. Welcome to Usapang Stocks featuring CREIT, the Philippines' first energy-based REIT company. This morning, we'll be presenting to everyone the CREIT IPO overview, their business model, revenue sources, the company structure, their existing portfolio and expansion plans, some key risks, and what we like about CREIT. After the presentation, we'll move on to a general question and answer session together with our panels, Mr. Oliver Waitan, CEO of CREIT, Ms. Joanne Cosico, the Head of Investor Relations, and Ms. Mia Cortez, Chief Financial Officer for CREIT. And for our dear clients, you may send our questions through the Q&A tab located in your Zoom taskbar, which we'll get to at the end of the presentation. All right, so let's begin our presentation. Citicore Energy REIT Corporation overview. So, what's the business model of the company? It's the country's first energy-based real estate investment trust with green revenue sources, which is solar. The way it works is that CREIT's tenants are power generation companies, and they enter into offtake agreements with its customers, the government for the FIT rates, and the companies for the private sector. CREIT then receives property lease payments from the power generation tenants in the form of the GARR and the VRR. We'll go into that in the next slide. And then the lease payments are distributed as dividends to investors, while the sponsor Citicore also receives dividend from CREIT with its equity stake, which they'll later use on to develop a pipeline of projects. CREIT then develops solar power plants that will be infused into CREIT after the plant establishes a proven track record. For revenue sources, here's the annual breakdown of how CREIT generates its revenues. First is the guaranteed annual rental rate, which is the GARR, the fixed payments of its tenants to CREIT. Second is the variable rental rate, which is equivalent to 50% of the incremental gross revenue earned by the lessee from any excess of its actual energy generation for the current fiscal year over its base revenue. Okay, so that's a little bit heavy, and this is where we want Mr. Tan to come in. So we all know that companies give dividends based on the guaranteed lease payments paid to them by the tenants. CREIT, it comes in with a unique income stream for the co in the existing REITs market. And it's the only REIT to be able to offer a VRR. Can you shed some more light on how the VRR works? How did you come to adding that to the dividend prospects?
Yeah, hi Gab. Firstly, good morning to all the attendees.
Morning, sir.
Yeah, so the variable rental component has two main drivers. One is the actual generation output. So if the actual generation output from the solar plant in any particular calendar year is higher than the assumption in the base output, and the second would be the tariff increase. Please note that around 30% of the offtake contract of the tenants are under what we call the short duration contract. These are being renewed every year, every other year. And so upon renewal, any potential increase in the tariff rate, you multiply that by your generation output. That would be the incremental revenue that the lessee will earn, and they will share 50% of that incremental to the REITco via the variable rental rate.
Okay. So if I understand this correctly, sir, the guaranteed annual rental rate, that's already been established for a long-term perspective.
Correct. So the guaranteed base lease is essentially 5-year historical average of the EBITDA of the tenants. So that's going to be guaranteed independent of the actual plant performance of the tenants. So you have a downside risk protection to CREIT investor via the guaranteed base and upside participation via the variable rent component.
Okay. So in this case, the guaranteed annual rental rate that's already been established, moving forward in the 20 years for the tenancies that you have, that is what you will always be distributing as the dividends. That's your core dividends.
Correct.
And then the VRR later on, as you said, you mentioned something about short-term contracts. As you renegotiate them and the price goes up more and more and power demand is there, you'll have the variable rental rate to distribute for that.
Correct. So how this translates to CREIT investor is that we will have the regular cash dividend, which is on a quarterly basis, capturing the guaranteed base lease. And then we will have a special dividend at the end of the year, capturing the variable rent component.
Oh, okay. So from our side, we really like that there's a variable rental rate component. No, most of the REIT companies that are listed, they're really focusing on there's the guaranteed rental rate because there's no growth. And I guess the growth would come from increases in the lease payments. But that's usually in 6 years. That's the average whale of the company. I think your whale right now is at 20.82 years. So with that, it guarantees your guaranteed annual rental rate for the next 20 years. And then what we like about the VRR is that it adds that special dividend that you mentioned, where there's that organic growth along the way of the 20 years, not just premised on the rental rates of your base GARR, but as power demand goes up and the tariff rates go up, the cost of power goes up, then investors are able to participate in it with a VRR.
Yes,
Yeah,
that's correct. Yeah, John,
and
please.
if I may add, Gab, no, and that's one of the unique aspects of the C-REIT, no, differentiating to the typical property REITs that are in the market. Our occupancy rate, for example, is 100% at any given time, because it's not like the solar companies that are occupying or that are operating the solar plants will say, oh, you know what, C-REIT, I'm just gonna give back half the area to you. I don't need it anymore. It's not the case, because they're bound by a service contract. They're supposed to manufacture, or they're supposed to produce a certain megawatt, right? Unlike, for example, office REITs that would be affected should there be any economic downturn. Their tenants can actually downsize and give back some floor area to the tenant. So I'd say that C-REIT being leased out to a solar plant operator ensures that there's no occupancy risk at any given time. And then these are backed by long-term lease agreements. And as mentioned earlier, the upside is there every year compared to, for example, a typical office lease that would have escalation rates kicking in at certain milestones, right? So, and that at the end of the day, you're investing in a REIT that has a green portfolio, and I think that's also a good differentiator.
Yeah, we like the renewable energy sector, especially the solar. What I like about what you said, Ms. Cosico, you're right. It's in a way with the biggest impression this gives me, because the occupancy rate will be 100% because it is a power plant, and it's not like if you have an office building, you may have an average of 10 tenants. If there's an economic downturn, or especially like right now, what we're going through the pandemic, when offices had to close, there were no tenants for the buildings. So I think what I like about what we're saying is that this is coming out to be a defensive stock. It's going to be a very defensive stock moving forward. Demand for power will always be there. We saw that during the pandemic. I guess on the power sector, the industrial and commercial power that was cut down because economic activity was low, essentially just transferred to the residential sector. So yeah, we see that as very defensive. And for the prospective investors in this call, that's one of the things we like about it. No, the fact that this company is focused on power and power demand is there. And we also know one of the tailwinds is the Philippine Energy Plan, which is targeting 50% renewables by 2040. So there's a very big tailwind for the company, and it's a defensive stock. And on top of the defensive stock position, it's a REIT company. So what's happening here is you get the dividends and you get the growth from the future asset injections. Yeah. Okay. So thank you for
Best of both
clarifying that for
worlds,
us.
right?
Yes, yes. Okay, so let's go on to the next one. Oh, okay. So we're pleased to highlight that CREIT has a diversified and established list of off-takers for its generated power. For the periods of 2017 to 2020, we did it on a pro forma basis. The NGCP accounted for 39%. 61% of the power generated came from the off-take agreements with diversified conglomerates such as ASEN, Shell Energy Philippines. Industrial park operators is very nice because they'll always have demand for power. Freeport area of Bataan and Ecozone Power Management Incorporated, Laguna Technopark, basically. So we'd like to ask this question to management. So 95% of the power produced is contracted. And we noticed that ASEN is an off-taker. How does that work? We know that ASEN is produce power themselves. Eh? Can you shed some more light into that?
Yeah, you know, ASEN has been buying power from us since 2017. Okay, and
Oh,
that was even before ASEN turn around and become a pure renewable. As we speak, they're not yet pure renewable because they still have
yes.
their legacy coal plant, right?
Yeah.
So the relationship started back in 2017, and the contract has been renewed. I think 2 to 3 times already, and it has evolved. The relationship has evolved from buying electricity to a joint venture partner. That's why we are
Oh,
now the partner to jointly build 1,000 megawatt of new solar plant. Okay, so we've been supplying to their to the most of the Ayala properties through AC Energy. That's how
okay.
it evolved.
So ASEN gets power from you, and then they supply it to their own properties that they're using. So in effect, they're using your energy and selling it off through ASEN. Is that how the setup is?
Correct, correct. Yeah.
Okay. So now I guess we all know that power from ASEN isn't only just produced by ASEN; it also comes from CREIT. That's nice to know. Additionally, what's your outlook on the demand side for contracted power on the long term? I guess as just you go across your contracts, your short-term contracts, and the West M as well. You see 5% of your power is sold under priority dispatch to the West M.
Yeah. You know, with the old coal plant as backdraft, you know that most of our coal plant has been degrading 1% every year, and that's why you have unscheduled shutdown. Our power supply is very thin compared to the expected increase in power demand as the economy recovers from the pandemic. And you know, if you look at a while ago, you correctly pointed out with the PEP, that our government is targeting 50% of our demand to be sourced from renewable energy. Just to give you some numbers so that you get the context, that would mean by 2030, the renewable energy contribution to the total demand should be at 34,210 megawatt. Of that, the projection of DOE of the 34,000 megawatt RE, 14,000 megawatt will be solar. Okay, that's 14,000 megawatt, and the total solar installed capacity to date approximate to around 1,200, 1,200 to 1,500. That is your runway. So we're talking about
Ah,
13,000 megawatt of new solar to be put up until 2030. That's your market pie for solar alone. Okay, so that's your demand, and you know, in the long run, in fact, if you look at the spot market price last year, Wesem, it is highest it, compared to 5 years ago.
okay.
2021 still being technically a pandemic year, yet the spot market price is even higher than pre-pandemic levels. We believe that the spot price will remain elevated in the next 5 years.
Oh, okay, okay. I like, sir, what you said about the numbers that we see right now. You really do have a long runway. And I think to investors here on the call, on our side of things, no, one of the things that we're quite optimistic about, given the long runway that Mr. Tan mentioned, is that even if there's a lot of companies right now getting into solar, if I do my calculations on the projects in the pipeline do not amount to the demand of the 2030 as estimated right now. I think I'm correct there, no, Mr. Tan. Yeah.
Yeah.
So I guess on a competition risk standpoint, there's a big pie for everyone to take a piece on, no? And then it's coming out. If I look at the data that I saw, you were around third on the biggest renewable companies here in terms of installed capacity.
Yes, that's correct. And not only that there's enough room for everyone, for all the
Mm.
players, it is important to note that Citicore is one of the uh, early player in the renewable energy sector. We
Yeah.
started 2015. So there's a first mover advantage here. It's very nice to hear that, oh, everyone wanted to enter to solar. We will build 1 gigawatt, 2 gigawatt, 3 gigawatt, 3 gigawatt. But on reality on the ground, it takes special skill sets to really achieve that target. No, we are vertically integrated business model. We know how to develop greenfield projects, to design them efficiently, to build them, and all our solar plants we operate and maintain on our own. We know that. Do you know that for you to build a solar plant, you would need to procure 250 permits, local and national. So while it's easy to say, oh, I want to build 1 gigawatt, 2 gigawatt, reality on the ground, you need to know how to navigate regulatory approvals. Even site selection is critical. If you look at all our operating solar plants, these are located in areas where there's really validated solar irrigation.
Yeah, I really like what you said about the vertical integration. I know you guys are also part of a construction company, and I think you get that core skill that you need to be able to construct solar plants moving forward. Okay. You talked about also what you've been operating since 2016. So let's move on to the next one. Okay, so here for the investors, here we show a summary of the performance ratio of the portfolio projects in the portfolio and the ones to be infused. They've all been operating for the past 5 years. The average availability rate of the solar plants are coming around 99%, and average performance ratio of solar plants and 81%. For us, these are impressive performance metrics. Can you shed some light, sir, on how you've been able to manage the plants consistently across the board, despite being situated across the country? You're not dealing here with concentration risk.
Yeah, this is mainly a result of the investment made by the company in terms of the digital infrastructure. What do I mean? We invested in state-of-the-art real-time SCADA system. So that real-time SCADA system enables you actually to monitor your plant performance remotely, okay? And it gives you a immediate red flag warning if there is an underperformance or non-performing PV panels, okay? What the result of that is quick response time, because without that, if you rely only on your visual and we're talking about hundreds of thousands PV panels in your solar plant, by the time you realize a certain panel is not performing, you would have probably lost 1 month, 2 months of revenue. Hence, your availability rate will go down. So with this real-time SCADA system, it's real time when a PV panel is not performing or underperforming. Immediately, our operation and maintenance team can replace that underperforming PV panels. Second, we also invested in what we call the computerized maintenance management system. This actually enables us to maintain both from a preventive maintenance to reactive maintenance, all our critical plants, equipment, and component. That's why if you look at the breakdown and scheduled breakdown, it's very minimal. We do our preventive maintenance at nighttime for obvious reason. It's not producing energy. That's why our availability and performance ratio is one of the highest in the industry.
It's nice. So parang what you do have is you have a control center and you have sensors for all of your plants, which allows you to be able to quickly react to anything that's happening. So even if it's your plant in South Cotabato, you'll know from here if something's underperforming. So that's how you've been able to have very good numbers. If these were grades on a score sheet, then you'd be an honor student when it comes to that, no? Okay. Moving on to the next one. Use of proceeds. So, okay, primary use of proceeds will be used to acquire properties of Citicore Bulacan Inc. and Citicore South Cotabato. It will add an additional 21.2 megawatts to the existing 123.7 megawatt portfolio. Our question here, we understand that the 2 properties to be infused have a fit rate. So that will bring 3 of the 7 properties to be infused with a fit rate, including the Clark plant.
Yes, that's correct. The 2 properties, Bulacan and Cotabato, are fit plants as well.
So yeah, that was the time in 2016 that they awarded the fit rates. So you were able to get an allocation for these 3 plants.
Correct.
Oh, that's pretty strong. During that time, for investors who don't know, who weren't aware at that time, during 2015, the government allocated up to 500 megawatts with a fit rate, and awarded it to several people who were trying, companies who were trying to build power plants. And we see that at that time we were getting. I remember we were entertaining funding requirements for companies. They only have one plant. You have three. So this was during that time, and that was the time that you built it. So for us, we see that they're very competent in being able to, number one, build the plants, and number two, I remember, as you mentioned, sir, 250 permits during that time, and it was, everybody was in a race to get an allocation. In fact, there was a bit of an oversupply. So for us to see here that you have three of the seven plants, first it tells us that there's a guaranteed high rate for three of your seven plants. At the same time, it makes us look forward to how you'll be dealing with constructing the constructing the plants, because you did it in the midst of the race. At the same time, that's a relationship with the government at that time to be able to secure that fit rate. Okay, so here naman, we see that there's a secondary share sale for CREC with the overallotment option to be secondary share sales as well. I know there's been some worry going on with the secondary share sale, and we've mentioned this, that in accordance with the RR of REITs, sponsors who raise funds from secondary share sales are required to reinvest the proceeds into a pipeline development. I think the worry came there when people saw some secondary shares. If you were a standard company and a normal IPO, and it was a secondary share sale, and the owner was an individual receiving money, then that would pose great big questions for me, because why am I buying an IPO and I see some, the funds I invest just go nowhere basically. The difference is with REITs, it's been standard for the REIT sector to offer secondary share sales. The other REITs that have done it, RCR, REIT, they offered 100%. It was only a REIT that did 90%. And here, in fact, with CREIT, we're doing 67, no, smaller pa, 45, that's 45 plus 13, just 63% or something like that. That's very good for us. Pero I guess straight from management, so that we can address this. Can you shed some light on the CREC's use of proceeds from the secondary share sale? I'll forward it to the next slide where we outline the current portfolio and reinvestment plan.
Yeah, Gab, there's a lot of misconception about the secondary share sale. The proceed from the secondary share sale will not go to the pocket of the selling shareholder.
Right.
Under the REIT, all proceed from the primary and secondary share sale will be reinvested to build our pipeline projects, which is in your screen. Yeah.
Yeah, so I understand that along with this reinvestment plan, you have to submit a certificate of undertaking to the PSE and the SEC, essentially stating that the funds that you will be receiving will be used into investing into this pipeline. Right.
Correct.
Okay, so here we have 123.7 megawatts. That's the existing portfolio. The additional capacity of properties to be infused is 21.2. So post-listing will go at around 145. We'll have three of the seven plants with a fit rate. On your perspective, when we're looking now at the reinvestment plan for the project pipeline, now we all know the secondary shares, proceeds from the secondary share sales will go into that. From your perspective on the 634 megawatts, what's your timetable for the completion? And how and when do you plan to infuse them?
Yeah, so approximately 120 megawatt of the 634.5 megawatt will be ready for infusion by end of the year, if not early next year. In fact, the first project, the AFAB rooftop, was completed last year. It is already generating power and selling to the various locators inside the Freeport area of Bataan. The Arayat phase 1 will be completed next month, or sorry, this month, February. Before the end of the month, we're already preparing for the testing and commissioning. Phase 2 will immediately start the construction. The land, we already bought the land, it's just adjacent to phase 1. The target is to complete by end of the year. Okay, so you already have these first two projects in the pipeline, totaling to approximately 120, ready to be infused. And then the next batches, the Zambales, Batangas A and B, these three projects I think would total to, hold on, 100 something, 195 thereabout,
Yeah.
um, are in advanced stage, meaning we already secured the land rights, we already secured the service contract from the Department of Energy, we started doing the engineering design. The target is to break ground, start construction by before end of the year or early next year. So you have that visibility that it's going to be ready for infusion by end of 2023, if not early 2024. And then the next one, the Pangasinan, Laguna, Bulacan, we are in the advanced stage of performing legal and technical due diligence. Obviously, this will have to go through a checklist to make sure that the titles are clean, and then resource assessment, all the technical due diligence. The target is to start construction probably by second half of 2023 for these 3 plants. And lastly, the run-of-river, we already started construction for this one. This is our maiden run-of-river project.
Hydro.
Target completion of this one would be by 2024.
2024. Okay, so I guess we're looking at everything within the next 3 to 5 years here, no, in this timetable.
Yes,
Okay.
that's correct.
Oh, and also I understand you mentioned it earlier. One of these projects is in the JV with ASEN.
Yes, that's the Arayat, Mexico.
Ah, okay. Wow, that gives us more confidence. So we see that you're a company that's also engaged with a big conglomerate here for this project. Okay. Oh, okay. So beyond the pipeline, beyond the 123, 21.2, and the 634.5, what further prospects do you see for CREIT?
Well, the sponsor has total of 1,500 megawatt in the pipeline. So this is only 635. Okay. On top of that, the REITco can actually acquire performing assets from third party should there be opportunity in the market. Okay, while the sponsor is there to provide, to feed, to grow the asset portfolio of the REITco can also look for opportunity from third party.
Okay, so you're saying is you're not only looking into what you're already developing, and you've mentioned right now 1,500 megawatts, you're also open to acquiring other solar projects that are being developed by other developers.
Yes, as long as it meets the investment criteria of the REITco.
Right, of course. Okay. Maybe we'd like to just, I guess, go into that. What would be the investment criteria of the REITco when they look at these projects moving forward?
Yeah. So obviously, first, the plant has to be operating already. Okay. Number 2, the output, the electricity output from this plant should have an off-taker already, because these two will give you the stable recurring income that a REITco would need. Okay. Thirdly,
Okay.
obviously, we need to see if there's a strategic fit to the existing asset portfolio of the REITco.
Right. Okay. Okay, so at least we know that right now there's the projects in the, it's one of the things we likes about this is it's a company that's listing with an existing portfolio, and you have 2 to be readily infused that have already been providing power since 2016, and then you have the pipeline with the 634 here, where we'll get the reinvestment, the plan with reinvestment is based on, and then as you've mentioned on a longer term scale, there's also a 1,500 megawatt capacity that you're also targeting as a group. Okay, moving on to the next slide. So this will be quick lang. So this post-offer structure of CREIT, I guess this is where we show that the secondary share sales will go to the sponsor, which is Citicore Renewable Energy Corp. And they'll be using the funds raised from that to develop the pipeline that we've mentioned. And the public shareholders will get 38.3%. Okay. We just want to look into some relative valuation table here to look at the numbers for Citicore. We've selected all the REIT companies here in the Philippines. So we have AREIT, DDMPR, PhilREIT, RCR, MREIT. We're able to also see renewable energy REITs in Japan. So we have Japan Infrastructure Fund and Renewable Energy Infrastructure Fund. And then we got the market weighted average, so you're able to get the scale of the PEs. On the PE side for 2022, at the offer price of 2.55 per share, your PE is coming down at 15.1 times. It's a big discount from the 22 times from the market weighted average. No? On the 2023, 16.1, then there's a 20.7 times for the market weighted average. On the ROE side, at the offer price, you really outperform the market. The market's going at 17.9, 20.3% for 2022 and 2023. You'll be logging down 27.8%, 29.1% on the ROE side. This one is the most, this one is what we like the most about CREIT. On the dividend yield side, at the offer price, you're looking at the estimated dividend yield of 2022 at 7% and 2023, 7.4%. And while we're looking at the entire Philippine REITs market to just average at 5.2 to 5.3%. I guess you'll be seeing here that DDMPR is pretty high in terms of div yield, but I think that's a function of the price going down in the market for the past year. I guess we have two questions here. No? So what would be the driver for the increase of div yields for 2022 to 2023? And in the 7%, we talked about kanina how there's a GARR and there's a VRR. What part of the 7% is the GARR and what part of the 7% is the VRR?
Yeah. So Gab, before we answer that question, I can see based on your table that we not only leave money on the table, but a lot of money on the table. So the investors will be very happy. Yeah. So I need Mia to help me on that question. But the increase in the dividend from 2022 to 2023 obviously has to do with operational efficiencies and the expected increase in the revenue side. Okay. So yeah, Mia, would you like to add color to this?
Yeah, so for the dividend yield, for purposes of information for everyone, this includes the 7 properties already of CREIT post-acquisition, which includes Cotabato and Bulacan properties. And at 7% dividend yield for 2022, major portion is pertaining to the guaranteed base lease, which is about 98.2%. In terms of our projection for 2022, we keep the variable lease at a conservative level, giving about 1.8% only of the total dividendable expected dividends to be declared for 2022. So there's really a lot of room for the upside in terms of how the solar plants operations will be performing for 2022 and the years moving forward. And yun. So basically, that's there's really a lot of growth in terms of dividend yield and in terms of possible capital appreciation based on the pricing that we have set for CREIT.
Thank you, Ms. Cortez. So I take it that parang the 7% and the 7.4% we're looking at looks more of a base scenario. And then moving forward, there is a potential upside that you may get from the operational efficiencies as well as, I guess, renewed contracts if you have any expiring this year that have to be renegotiated for next year. Okay, so yeah, we like that. I think on the PE side, this already gives an idea to investors. If we look at our books, they'll tell you at 15 times, that's a good measure for you to start looking at a stock on a PE perspective. And here, CREIT hits that on a textbook basis. All right, moving on to the next slide. Okay, so key risks. So in our analysis, our USI research analysis, we've identified some key risks that we think, and here we'd like to hear what you think about what you think can be done, how you mitigate the key risks here. We'll start on the limitations of the use of leverage. So the IRR for REITs only allow for leveraging up to 35% of deposited property only. Like a traditional company where you can borrow money without any restrictions, and you have to keep a good DE ratio going. For you have a limit on deposited property. As we understand, CREIT is debt-free as of today?
Yes, that's correct.
Okay.
Yes.
All right. So yeah, we like the unlevered position. You can utilize the entire 35% from that. Moving forward, how do you intend to fund the acquisition of future assets to be infused in C-REITs? We now know that you have 35% of runway on the debt side. How about for the requirements that will come?
Yeah. So firstly, as you correctly pointed out, the REIT co currently is unlevered. That we can borrow up to 35% of deposited property. That should approximately be 5 to 6 billion pesos thereabout. Based on our back of the envelope calculation for the batch one to be folded in, that's the 120 megawatt. That should be sufficient to fund the acquisition of the first batch, the 120 megawatt. Now, with regards to future acquisition, obviously, we can look at various means that can either be another follow-on offering or an asset for share swap, such that the sponsor will retain its ownership. There will be inevitably dilution.
Okay.
If you already maximize your leverage, okay, but dilution is not a bad thing, because dilution would come basically at a higher earnings. So as long as the acquisition will be value accretive, it should more than compensate your dilution. In the end of the day, you will end up more dividend per share. In spite of the dilution, your dividend will be better.
Yeah, so I like what you brought up about dilution. No? That has been something that investors have been looking into. And we look at C-REIT here, we look at how the REIT sectors have been doing. So there is dilution every time you do an asset for share swap. But the key point, the key calculation that a company has to do when they do that is they're able to offer more value, than the dilution that you're about to get. No, so Mr. Tan did mention that. As a company, as a REIT company, we haven't seen anybody put some dilution and not get as much value. And you'll see that in the dividend yields. That's why dividend yields have been maintained in the REIT sector. And I guess, sir, with you giving us that insight, we also see that you'll be doing the same. Despite the dilution, the value accretive to dividends and for the investors will always outcalculate the dilution that's given to them. Okay, so yeah, so it's an asset for share swap. It's a use of from the use of leverage. We've also looked into a follow-on offering for you guys moving on. And for our take, you guys have been listed from before in your other company since 2011. So we have confidence. We have confidence in your management and your experience in being able to do offerings here and how the public market perceives the company. Okay, so seasonal weather changes. So we all know solar is susceptible to seasonal weather changes, but we've noted before in the previous slides that availability factors and performance ratios have been consistent in the past 5 years. But I guess with relation to the recent typhoon that we got, moving forward, how do you plan to mitigate this risk? And I guess since I mentioned Typhoon Odette, any inputs on what happened, how you guys performed during that time, and how it is doing now?
Yeah. So solar technology is a mature technology already. If you look at the historical generation output of a solar power, like in our case, we've been operating for 6-7 years already. We've weathered maybe 20 typhoons. 4 of them are super typhoons. Okay, while if you look at the daily or monthly, there will be seasonality. Obviously, solar plant produce higher power during summer season compared to rainy season. But if you look at on an annual basis, it is pretty stable. Year on year, the generation output for the past 6-7 years, in our case, for our plant, if we look at the European solar plants on a much longer horizon, 10 years, 12 years, you would see that in spite of the weather changes, the generation output of a solar plant has remained stable, because the technology has been proven. Okay. Now, the recent typhoon Odette last Christmas caused some damage to our Toledo solar plant. But
Okay.
the damage, just to give you an idea, is actually less than 1%. We have to replace 2,000 PV panels that were dislocated out of 200,000 panels installed. Okay, so that's 1%, less than 1%. And then we have to restore one of the 6 transformer that was damaged also by the typhoon. In fact, all told, we're able to restore the plant in probably less than 2 weeks time. Okay.
Oh,
Um,
that's pretty fast.
yeah, so we are prudent enough to cover all our solar plants with property and business interruption insurance. So the property insurance obviously covers for 100% replacement costs in the event of a total wipe out of the plant. For the business interruption, it covers the tenant up to 6 months worth of revenue losses. In our estimate, it will take you 5 months, max 5 months, to import new panels, rehabilitate, restore your power plant in an event of a total wipeout. So that the tenant has that 6 months business interruption for 6 months worth of
Mm.
revenue losses to
Mm.
be able to service its guaranteed base lease.
That's a very big thing to mention, that you have the insurance side for these for your power plant. So on top of what you would do as a company to be able to repair your plants in the event of any damage from seasonal weather changes, in the event that you're not able to, if the damage is big, you actually have that insurance catch pa. So that, I guess, that the insurance payment does in the event of that, it still allows you to continue doing your guaranteed annual rental rates. No, okay. So at least for that, we see that there's been that question: what if the power plants decrease because of some from a weather disturbance? How will the GRARR do? How will they be able to pay off? How will the payments tenants be able to pay off CREIT, and how will CREIT be able to dividend? And I guess that simply answers the question. You have the insurance on top of the efforts that you're doing. You have the insurance. Okay. Um, Next one. Yeah, we've talked about this a little bit, but we'll ask the obvious question to it. Delays in the implementation of the reinvestment plan. So we mentioned that there's a 634 megawatts. We're looking at it within a 5-year period. What's the current pace of the ongoing projects? You've answered that, but I guess, what challenges do you see in completing these projects, and how do you plan to mitigate the risks moving forward to be able to get into the 5-year prospect that you're looking at, and that the delays and the risk of having delays are mitigated?
Yeah. Obviously, if we break down the risk in greenfield development, first would be your site acquisition, the land acquisition. We did an extensive analysis. In fact, we have the grid map of the Philippines. We know exactly where to put our 1,500 megawatt pipeline projects. It's not like we're in the dark looking for land,
Ah,
shooting at the stars. Okay, we know specific where this 1,500 megawatts should be placed, where there is enough grid capacity, and all those facility study. If you look at, I mentioned a while ago, I would say, out of the 60% of the 635 megawatt in the table, we already secured the land. Okay, so that's
ah,
very important. If you don't have the land, you cannot start. If you have the land, then
yeah.
that's a starting point. Okay, and then I mentioned the last 3 projects. We already have prospect land. We're just doing the technical legal due diligence to ensure that the land fits our requirements. Okay, so you have 635 megawatt in advanced stage, and then as I mentioned, the Zambales, Batangas, we already secured the DOE service contract. That's the most important of the 215 permits that
Okay,
we.
okay.
That's the
Yeah, of
most
course.
important. So we already secured that. Okay. Now, in terms of construction, you know that our sister company Megawide is the largest construction company in the Philippines. Okay. We leverage on their complements of engineers. Okay. In designing the efficient design of our plant, and even during construction, procurement and construction. So we have that leverage because of our sister company, engineering company. Okay, so I would say delay in execution for this pipeline is an inherent risk. Okay, I will
Mhm.
be very straightforward. It's not a walk in the cloud. Okay, it's an inherent risk, but rest assured, the management has been operating for the past 6 years. We have the track record. We know how to complete a project. We have that track record to speak for our capability.
Right. All right. And as we mentioned also, we do like that your sister company is Megawide. You're leveraging out the fact from their construction. We've seen that that's one of the things that you've relied on and to be able to construct your existing pipeline. So moving forward, we do see that yeah, you have your core competencies in line in being able to achieve the target that you've set, and that while the risk is does pose well delays does pose a risk. You've experienced that before and you've been able to complete projects. I think one of the highlights that we can put here for the delays, again, 3 of the 7 fit plants have a fit rate, and it was during a time that there was a race to complete it to get an allocation from the government. It was such a race that there was more than the 500 megawatts allocation that was being built, and there were other power plants that were left behind. They weren't able to get a fit rate, but you guys were able to get 3. So in terms of the delays, I think what you're saying also, and what we know from the company, you guys are quite experienced in building your pipelines and following through with it. Okay. So the majority of the land holdings are leased. No? So I think that's one of the things that investors are looking at. It's best if you own the company. Sorry, if you own the land. But if you're leasing the land, there could be some risks moving forward on the renewals and escalation of lease rates. We know that for 2 of the 4, there's a right of first refusal for the Delayab and the Toledo. So that's settled. For the Clark and Silay properties, what would your risk mitigation be for that, given that they're leased, moving forward with a sublease risk could be involved?
Yeah. So let me just walk you through the history, okay? And
Sure.
then I will discuss the future plans, okay? When we started the renewable energy business back in 2015, we still don't have the REIT in place, okay? So back then, as a power generation company, obviously you would want to be as much as asset light, okay? So if you can enter into a long-term lease than acquiring a land, that would make a lot of sense back then because we still don't have the REIT. That's why we have 4 properties in long-term, 20, 25 years long-term arrangement, because it makes a lot of sense. Now, we were prudent enough to incorporate in our leasehold agreement the option to acquire the land if we see it to be value accretive and if it makes sense to acquire. Okay, so since we have that option, the REITco can now exercise that option if it sees value accretive. No, so now since we have transformed into a REIT company, all the future asset will be freehold land. So
Okay.
while the initial asset portfolio, we have 3 parcels or 3 or 4 are leasehold. With the future asset, this will all be freehold. Okay.
Okay. So I guess, when I look at that, I see value in what you're saying that you have the option to acquire these current leased lands, because towards the future that could actually act as sort of a asset injection into the company. If you see that the power demand there is very stable past the lease tenancy tenure that you have, no. And then moving forward, no more leased lands. It will all be all freehold land. So what we're looking at on the pipeline for 634, once realized, this risk eventually gets taken out, because a very small portion of your land will be just leased. And when you look at the bigger picture, it will be owned. Okay, so thank you for that. One last question that we have on key risks. So it's a risk that we've been getting from questions from investors, and we know it's been worrying about them with regards to the future of CREIT and their expansion plans. So there's a regulatory case for Megawide. I'm sorry to bring this up, but there's a regulatory case for Megawide. Basically, the question is, maybe can you shed some light on this regulatory case? How will this affect CREIT? Is this something that investors should be worried about moving forward?
Yeah. So let me just quickly run you through the case so that investor understand, hence better
Yes.
application of that risk. Okay.
Yes,
The,
please.
the anti-dummy case allege that Indians are running the our Cebu airport, not Filipinos, not us.
Oh,
So that's
right.
essentially the nature of the case, that it's all Indians running primarily Indians running the airport, not Filipinos. Okay. Now, please understand that the management team, the organization structure of the airport has been the same since 2013. Okay. There
Right.
are minor changes in the management team. For instance, I stepped down as the CFO of that airport company back in 2016 to focus on Citicore Power, but my position was replaced by another Filipino. Okay, so
Right.
the organization structure has been there since 2013. When the syndicate lenders provided the financing, they did an extensive KYC, know your customer, and an extensive due diligence, including the senior management team, the organization. And these are led by ADB, by
Yeah. Okay.
BDO, by two government banks, practically all the big local banks in the country. Okay. The fact that they did the due diligence, okay, and then the government stipulated in the rules during the bid that all local bidders must partner with the foreign airport operator. So what we've did is we comply with the rules.
Hmm.
Okay. So there's nothing new. Okay. Now we believe in the legal system of
Mhm.
our country. We will let the legal due process run its course. Okay.
Mhm.
Now, how does that affect CREIT as a company? No effect, because as a company, it's an independent business organization.
Hmm.
Okay. It doesn't, there's no liability that will be transferred to CREIT because it's an independent organization. In the worst case, the risk, the potential risk is a key man risk, because the included in the respondent is Edgar Saavedra, the founder, and myself. So while we provide strategic direction, vision to the company, we have an independent management team organization running the day-to-day operation of our solar plant. So
Okay.
that's the worst case. You can replace me as a CEO and get a professional CEO. The company will continue to exist and run on
Mhm.
the worst case.
And I guess that more just simply relates to the bigger pipeline later on. No, if we look at the existing pipeline, it's already being developed. So strategically, I know you're probably looking to on top of the 1500, but at least the 1500 is already set for you. And in effect, if we look at the dividend yields that you'll be getting, it's based on leases. It has nothing to do with the case that's against you guys. Whatever, the dividend rates will continue to be paid. You'll still be able to get from it's a 20-year lease, no? So yeah. Okay, well, thanks for bringing that comfort to investors. That also brings us comfort as well, no? And yeah, so I guess it's important what you said, that CREIT is independent from Megawide. You have your own team managing the day-to-day basis. That ensures business continuity. All right. Okay. So thank you for that, for the key risks. Um, Go on to the next one. So, okay, from as Unicapital, these are some investment highlights that we like. Established track record. So as mentioned, you guys have been producing power since 2016. You built plants. You have three of the seven with a fit. You have good performance metrics. The VRR is a unique income stream. It's very unique to see REIT in the REIT sector. And we like the bonus margins it contributes to the dividend yield potential. Secured offtake agreements. You have ASEN, you have Shell Energy Philippines, you have industrial park operators. You also mentioned that the West M prices have been going higher. So on that day, we know that the demand side for the property is good. The additional 21.2 megawatts is secured with a FIT, and yeah, we've been mentioning that. With regards to 634, and this is what we said about this. We like that you have a quality pool of potential acquisitions to choose from. It's the way that we see your 10 projects in the pipeline, and the way you've mentioned that it's still up to CREIT whether they'll infuse it or not. The pipeline is coming out to be something that CREIT can cherry pick from which ones will have the good rates and which one will be most value accretive at the times that they're done. And then later on, the target 1,500 megawatts installed capacity. So that's for the longer term outlook for your company. Next slide. So again, we'll just go into this IPO overview. So company name will be CREIT Energy REIT Corporation. The ticker symbol will be CREIT. They're offering 2.5 billion common shares, comprising of 1 billion in primary shares and 1.1 billion in secondary, and up to 327 million in over allotment option. The offer price will be at 2.55 per share. Offer period will be from February 2 to 8. Total proceeds to be raised, assuming a over allotment option is exercised, is 6.39 billion. Listing date is February 17. So with all of that and everything that we've talked about, we're very excited for this. And I guess to the company, would there be any parting messages you'd want to give to our investors?
Yeah. So, we've been, we are seeing strong demand from both domestic, international investors. And so far, we kick off the public offering yesterday. We've seen the excitement and the interest level is really very encouraging. Key takeaways, as just to add to what Gav has mentioned, we are unique compared to the listed REITs, mainly because of how we structure our lease framework structure. With the guaranteed base lease, that's the variable, the REITco enjoys 100% occupancy rate all year round. That, I think, is the real benefit that the other property REITs doesn't have, mainly because they are inherent to vacancy risk as tenants come and go. So this is going to be, you are not only investing in the REIT, but you're also investing in the renewable energy prospect of the industry.
All right. Thank you for that. So I guess with that, we end our presentation and we now have to go into the last segment of our call today. We would like to entertain some questions that we've been getting from the people who are on this call. So one of the questions, let me just read this. Well, you mentioned that the solar plants are fit all. Were these approved already by the DOE? I'll answer that for you. That's yes. The question is, what are the plans after the expiration of a FIT? Will there be a decrease in dividends by then?
That's a good question, and that's a long down the road. Okay, the expiration of the FIT will be 2036, if I'm not mistaken. So that's 14 years from now. If we have the crystal ball, what would be the WESM price by then? We can easily answer your question. So it will depend really on what would be the spot market price by then.
Okay. Another question. Are there any plans to diversify the portfolio to include other RE technologies such as wind and biomass and ROR?
Yeah, the answer is yes. While the asset portfolio are primarily solar power plants, there are plans to diversify to include energy storage system, runoff river, and wind.
Okay, give me a moment. I have one more question that's being typed into here. We're waiting for it. Give us a moment. I guess one of the questions that have been raised, no? So your power plants are situated all across the country. You have some in South Cotabato. I have one prospective investor here concerned about security risk. So I guess terrorist acts or NPAs, things like that. I guess they want to know if the properties will be secure.
Yeah. So our plants are also part of the property insurance is what we call the sabotage and terrorism clause. No? So our plants are secured also with sabotage and terrorism event. Okay, but notwithstanding, what's unique in Citicore is that we introduced the agro-solar concept, wherein we don't displace farmers, we don't dislocate communities. In fact, we coexist with them. We plant high value crops beneath our solar plants along the aisle of our solar tables to augment the income of the farmers. And we provide what we call Usbong scholarship. We provide a scholarship to the children of the barangay tanods in the community. So what it does is the barangay tanods are the one patrolling and securing our power plants. And through that, we were able to get what we call the social acceptance and social fencing. So it's them, it's the community that's protecting our asset, mainly because they benefit from it.
Okay. So I guess on top of just entering an area and establishing a business, you enter the area and become a part of the community.
Correct.
Right. Oh, here's an interesting question. Battery technology. Is the company looking to invest moving forward on energy storage technology?
Yes, it's a natural progression. If you're into a solar, if you're into solar business, in our case, it's a natural progression because it complements your solar plant. And from what we're seeing, there's a night peak market that is opening up. Hence, solar plant complementing with energy storage system will be able to expand into that night peak market.
Yeah, because for now, being solar, you're only able to operate through the day. So if you go into battery technology, that will effectively allow you to harness energy, store it in a battery, and also deliver it at night.
Yes, that will open up our market. So now we have
Yeah,
two markets, day and night.
yeah. And then if I look at it, when I look at it in 2012, 2014, the cost of doing solar was very expensive per megawatt. I think you were looking at $2 million per megawatt, if I'm correct. And then right now you're doing it around $640,000 per megawatt. Maybe right now battery technology is expensive. But if you look at how the pace of technology goes past 70, that 2016 was about like what, past 8 years ago. I guess with battery technology, that can be an upside pa, no? Moving forward, because you'll almost double your market, not just the daytime, you also get the night peak also, as you've mentioned.
Yes.
Okay, well, thank you for the question for that from the investor. That's very interesting. I guess that highlights that we can see some more upside. There's a lot of potential for the company. Hold on, I'm just gonna clarify this question. Okay. While my analysts are looking into that, clarifying that question, here was one more key question that is quite straightforward. Can you expound on how CREIT will benefit from the Department of Energy's Green Energy Auction Program? Gia, yes.
Yeah, so we're in fact very excited of the JEA program. So the DOE is auctioning initially 2,000 megawatt, I think this year, and then they would want to do it every year, 2,000 megawatt. Of the 2,000 megawatt, 1,000 megawatt would be for solar. Okay, now we have three of our 7 plants are FIT, but we have 4 of the 7s are non-FIT. We're selling to the private customer. So this would total to around 100, 110 megawatt. So if we will be able to win in that auction, that would mean higher tariff rate. Higher tariff rate for our tenants would translate to higher variable rent component to the REITco. So the REITco will benefit from it.
Okay. So that's something also we're looking forward to. You have the FIT, and the JUP is essentially a renamed FIT. FIT allocation. So that's also another thing for you to look forward to. And you already have the existing power plants. So I guess in terms of getting into the race of building from today and then being able to get the refrigerate in the future, you now have existing plants that you can apply for the Green Energy Auction Program.
All right.
I guess we have time for one more question. Let's choose this. I guess this is one thing now that it's being asked that might not have been clarified through our presentation, and we'll end with this. So, are there any risk that the lessees won't be able to pay any land lease obligations?
You know, being a leasing company, a REITco, you're always naturally exposed to your tenant. It's not unique at Citicore, no? All the other REITs, they are obviously exposed to tenants, non-payment of tenants. In our case, the product of our tenants, being electricity, is a basic essential. It will never run out of fashion. And electricity is resilient in any economic cyclicality. Therefore, it gives you that comfort and confidence that the tenant will be able to pay its rent. Compared to other tenants in your office or commercial, you see because of the pandemic, restaurants are closed for 2 years. They basically vacate the, so in our case, at the end of the day, you need to look at the product of your tenants. The
Right.
product of our tenants is essential. So the risk is mitigated in that sense.
All right. Okay. Well, thank you for that. I think we can end with that. This has been a very enlightening conversation with the company. I think we've been able to cover a lot of the key areas that we wanted to discuss with CREIT, as well, most importantly, the risk sections that we've been able to mitigate. So I guess from our research team, one thing that we really like about CREIT is that they enter it's a power energy based REIT, which is new to the segment, to the REIT sector. As compared to the property sector, there is a lot of room for organic growth. The company already has a pipeline in the works, and we're quite confident that they'll be able to complete it. On top of that, we can't argue with the 7% dividend yield, which is coming to be the highest in the REIT markets here in the Philippine sector. And that's just something that you can get at the IPO price. Okay, so all right, that's all the time we have for now. We hope that you found this session useful in your investing journey. And once again, we'd like to thank our panels for being with us, Sir Ollie, Ms. Mia, and Ms. Joan. Thank you for also our clients who have also joined. And just as a quick thing, we would like to invite everyone to participate on our short post-event survey. And the link will be instantly opened once you leave this webinar. So thank you. This is Gab Agla, and thank you for everybody. Thank you, Mr. Ollie. Thank you, Mia. Thank you, Joanne. Thank you for sharing as well. So again, well, to end this call formally, we think the CREIT is a buy. Thank you.
Thank you.